And therefore, there is an increased pressure on you as members of the Hansard Department to make sure that what you're reporting accurately, what you're reporting, you're doing so timeously, so that even within a 24-hour period, for example, of some information going out into social media, out of context, misquoting, misrepresenting, we're easily able to go back to the reports that you have presented to be able to put the record straight. Because now, with the speed at which information is disseminated, a whole
of public funds. And Section 53(1)(b) says, the minister shall seek the approval of Parliament to abandon or remit a service to the government and write off a loss of a deficiency in public funds or public resources. On the basis of this, Honorable Chair, as much as we acknowledge that there are some impairments on this, we don't think we have the power to just write them off the books of government without going through Ministry of Finance and Parliament for approval. And to accommodate these provisions of the law and IPSAS, we actually made provision in the whole of government account to take care of this impairment. And when you go to statement of performance, I can refer you to the specific page. We have really made a provision from the statement of financial performance to take care of this impairment. And instead of us deducting it direct from this investment and reporting the net in the balance sheet or statement of financial provision, we reported this investment at gross and reported the provision under liability. So the net effect on both statement of financial position and statement of financial performance is the same as IPSAS want us to achieve. So technically, we are applying the adaptation, not blanket adoption, and the primacy of national law in the treatment we gave to this. We thought we should bring to attention to this Honorable House and our auditors and those listening. Thank you very much.
Thank you very much for your answer. Oh. Thank you. So, thank you for appreciating this impairment loss. But you also agree with me that, from your end, you cannot do. Do you also agree with me that, from your end, you cannot do anything with it, about it until it comes to Parliament? That's what the PFM Act and the Constitution of the Republic says. What steps have you taken to address these concerns?
Yeah, Honorable Chair, thank you. The first step is to engage the individual entities who have this in their records to really appreciate this impairment, and then get them to write to Ministry of Finance. Ministry of Finance will assist them, of course, to collate all this, and Ministry of Finance will have to take steps to come to Parliament for this. So with this on the agenda now, with the audit, we just have to start the process. And Honorable Chair, let me use this opportunity to acknowledge the contribution of auditors to improving the quality of the national account. Even this very account we are looking at, we, under the pressure at Controller to produce this account, sometimes certain things slip through. But for the audit, we wouldn't have identified them. And they drew our attention to certain things, and we did further probe even to identify certain things on our own. So we would like to really acknowledge the contribution of auditors. And this very thing should be seen as a matter of national interest, and not auditors getting at Controller. But we'll do our best to make sure we take the necessary steps to get them addressed. Thank you, Honorable Chair.
Thank you. Before I bring in the auditors, I want to find out from you, does this misclassification affect debt sustainability ratios presented to Parliament and the international lenders? Does it do that?
Not at all.
So, auditors, I would want your take on this.
Okay. Thank you, Honorable Chair. We actually, understand the concerns raised by Controller and Accountant General, but what we would want to state is that the standard, which is IPSAS 41, do allow entities to make an allowance for expected credit loss, depending on the credit risk. So the point of referring the impairment loss to Parliament, I mean, for us, it's a little bit on ease for us because the impairment loss is not a write-off. A write-off will constitute derecognition of the financial assets from the books of accounts. But impairment loss is more or less like depreciation. You don't need approval from Parliament for depreciation. When he read the PFM was saying write-off and not allowance for expected credit loss. And for that matter, we would indulge the Controller Accountant General going forward to, like this year, pass prior adjustment to rectify the misclassification. Thank you.
Okay. Now let me go to the next one. The next one is non-recognition of income tax and VAT receivables.
That is done, it will be difficult because even if at the end of 31st, if they give us any receivables as, any figure as receivable, that could be provisional. And then this will also be subject to disputes and legal issues. So at the end of the day, those provisionals, a lot of the amounts there might not be collectible. And we'll end up having huge buildup of receivables in our accounts. And if we have a lot of receivables in our accounts, we will need a parliamentary approval to be able to write them off. And we also have a lot of implications. What it means is that we will be overstating government revenue. We will be overstating government assets. And we will also be creating mismatch between fiscal performance and availability of cash. Again, it will also raise issues about credibility, about our fiscal reporting. Because if you have huge receivables in your books and they are still hanging, you are not reporting accurately. We also raise issues about confidence in our government accounts. So we think that we should tread cautiously on this issue. My brothers auditors